Okay, so today this morning we're going to go over the first midterm. I'm going to go through what was given as the midterm last fall, and your midterm is going to be similar. It's going to be different transactions, but they're of a similar nature, and and the midterm is going to be released Monday morning at 8 a.m. and you will have until Tuesday night at midnight to complete and submit the midterm. So let me go through here. All right, so you should be able to see the midterm here. What the midterm problem is a series of transactions. I'm going to give you a journal. So I'm going to give you a journal page like this for you to be able to record the transactions. I'm also going to be giving you a page with T accounts. So it will have all of the accounts that you need in order to complete the midterm. And then there'll be a financial statement tab for you to do financial statements. So the instructions say to post the journal entries, so to prepare journal entries in good form for the following transactions. And within these different dates, there are 10 distinct transactions that need to be recorded. And so they're worth 5 points apiece for 50 points. And then you're going to post those journal entries to the T accounts and calculate the month-end balances of every T account. Excuse me. And then produce in proper form the income statement, the statement of retained earnings, and the balance sheet for the month ending January 31st, 2020. So just starting with the first transactions, investors opened a dance school called Yolanda's Dance Studio by depositing $150,000 into a business bank account in exchange for 150,000 shares of $1 par value stock. So the debit for that is cash. So we're going to debit cash. Let me make that a little bigger so you can see it. We're going to debit cash in the amount of $150,000. The credit is common stock. And for your purposes, the journal entry is all going to be left justified. It won't be this, here. So don't worry about the indentation for the credit. You can just write common stock out here.
Well, we need to do the post reference.
No, you won't need to do the post reference either. And as a matter of fact, I'll delete that out of the version that I give you guys.
Got it.
So don't worry about that one either. So then we paid 3 months rent in advance for $9,000. So that one is going to be prepaid rent and cash. We hired a part-time assistant to be paid $800 per week starting next week. Now this one, and up here in the instructions, it said if no entry is required, write no entry. So this isn't a business transaction yet. We've just hired this assistant. They haven't worked any time. We're not owed any salary to them. So that one is a no entry. We then purchased sound equipment for $70,000. We paid $20,000 in cash, the remainder to be paid in installments of $12,500 every 2 weeks. So the debit on this one is sound equipment. And you can see that from here. We've got a sound equipment asset. The credit is 2 parts. You have cash of $20,000 and then $50,000 in accounts payable for the amount that is due every 2 weeks. Then we signed up 5 students who will begin lessons on January 10th. So that's 2 days. So now you signed them up on the 8th at $600 per week per student. And so this one is also a non-transaction. All you've done is sign up. You haven't begun lessons yet. You haven't earned any revenue. So this one also is a no entry. Then on the 17th, we received first week's tuition from 4 students. The 5th student will remit payment in 3 days. So on this one, we have 2 debits. We've received cash in the amount of $2,400 for the 4 students who paid us. And then we have a promise to pay of $600 from the 5th student whose, parent apparently picked them up without a checking book with them. And then all of that is tuition revenue. Then on that same day, we paid our assistant their first week's wages. So the debit on that, let's see, where did I put it? This is my answer key, so I just gotta find it. Oh, there it is wage expense, and the credit is cash. We received, as promised, 3 days later, the payment from the 5th student. So this one is a debit to cash. We received the cash, and a credit to accounts receivable. Paid the first installment on the sound equipment. So we said up here in the original transaction that the sound equipment was going to be repaid in every 2 weeks in installments of $12,500. So we're going to reduce accounts payable by the $12,500, and cash is our credit. Received an electric bill of $1,100 to be paid in February. So that is utilities expense. And we didn't pay it. We're not going to pay it until the beginning of next month. So this is accounts payable. And then lastly, we paid dividends of $500. So dividends is our debit, and it says we paid it. So the credit is to cash.
Was that an accident that you had that big gap, or?
Yeah, it's see this sheet here is what I would hand out in class, and you would write the debit and credit within these boxes. And so, I've got enough rows here for you to be able to do that, and so it's
Gotcha.
the way it turned out. So, all right, then you're going to take these transactions and you're going to post them. So you're going to post the initial cash deposit. You're going to post the receipt of revenue. You're going to post the receipt of the accounts receivable, and then all of the various disbursements. So for the prepaid rent, the down payment on the equipment, the payment of the first week's wages, the payment of the installment, and the payment of the dividends. And that's going to give you a balance of $110,200. So the total of the credit column is $42,800. All of the debits total up $153,000. The difference is the $110,000. In accounts receivable, you have the initial debit entry on the 17th of January for the $600, but then that is offset and paid off 3 days later on the 20th. The prepaid rent just has the one, as does the sound equipment, only has one entry. Accounts payable has the two entries, the initial $50,000 for this balance of the sound equipment, the payment of $12,500, and then the $110,000 for the utilities expense. Everything else has just the one entry. So we have one entry for the common stock, the credit for the $150,000, one entry for tuition revenue, one for wages, utilities, and then one for dividends. So once you have these posted, you can then do a financial statement. I'll make this a little bigger. So the income statement is got the tuition revenue, the full $3,000 from all 5 students. You have the wage and utilities expense are the only 2 expenses. That totals $1,900, leaving you with $1,100 in net income. And remember that all financial statements start with the 3-line header, so they're all going to have the name of the company. This is the income statement, and it is measuring activity, so it is for the month ending January 31st. Same with the statement of retained earnings. It's also measuring activity, so it's got the same, with just the second line is different. This is a brand new company, started when we first deposited that $150,000, so there's 0 balance in the beginning of retained earnings. We add the net income, subtract the dividends, and we get retained earnings of $600. The balance sheet. The balance sheet is not measuring activity, so it is just as of January 31st or just the date. So we had a balance of $110,200 in cash, 0 in accounts receivable, and you could omit that line. You could just leave that line off. My model has it there because in some versions of this exam, there is a balance in accounts receivable. Prepaid rent has the $900 and sound equipment with $70,000. The total of those 3 assets is $189,200. Accounts payable has the balance of the $38,600. That's the $1,100 of utilities expense plus the balance owed in the for the sound equipment, which was originally $50,000 minus $11,200. So that's $38,650. $37,500. That's what it is. 37,500 because it was 12,500 per payment. The common stock was 150, and we just did retained earnings of 600, giving total stockholders' equity of 150,600. And then add that, we get the same 189,200. So the thing that appeals to me about accounting is that when you're done with this midterm and you're finished with the balance sheet, if the balance sheet balances, you can have a reasonable amount of certainty that you are, in fact, did everything correct. But what if it doesn't balance? Well, I'm going to go over 3 methods for you to be able to figure out why it doesn't balance. All right, and I'll artificially create those. Let's see.
When will you be posting this?
I'll post this review as soon as I finish here. It'll take about 10 minutes for the video to render into an MP4 format, and then I'll post it on Blackboard. So it'll go up this morning. And then the exam itself will post on Monday morning at 8 a.m. And then you'll have until Tuesday night at midnight to complete it. Okay. So you can see right now that it doesn't balance. We got 190,000 in total assets and 189,200 in total stockholders' equity. If you take the difference between the two, you get $800. Go back to your original transaction. Sure enough, $800 is the amount that the assistant is going to be paid. So go look at your journal entries first and see whether or not you correctly wrote that journal entry with both a debit and a credit. You can see here that it was, and then look at your T accounts and make sure that both of them have been posted. And you'll see that no, the $800 is not posted to cash, and that is your problem. Put that in, and you'll see that once again, it balances. The second thing to look for is now the transaction is off by $1,000, and you look at your transaction list and there is no $1,000 transaction. Then go through and divide it in half. And you'll see that there is a transaction, $500, and what that is you've posted a debit as a credit. So what should be a credit of $500 in the cash account was in fact erroneously posted as a debit. So fix that, and your balance sheet once again balances. And then lastly, see whether the transaction, okay, now we're $2,700 off. There is no $2,700 transaction. half of that is $2,300 or $1,350. There's none of that. See whether or not it is equally divisible by 9. And sure enough, it divides by 9 by $300. What that is a transposition error. And you'll see here in cash that $12,500 transaction was erroneously recorded as $15,200. Correct that. And once again, the balance sheet balances. So those are the 3 techniques. Look for the transaction in the difference. Look for the difference in your transaction list. If you find it, fix it. That's you didn't record one side or another of the transaction. You didn't record the debit or you didn't record the credit. Divide it in half. That's recording a debit as a credit or a credit as a debit. So that's just posting it in the wrong column on the T accounts. If neither one of those finds your error for you, then divide it by 9, and if it's equally divisible by 9, then that's a transposition error. Like I showed, the 12,500 was erroneously recorded as 15,200. So those are the 3 techniques to find a balance sheet that does not balance. Any questions on this? So the journal entries are worth 5 points apiece. There'll be 10 journal entries. Then there is 3 financial statements, 20 points for the income statement, 10 points for the statement of retained earnings, and 20 points for the balance sheet. That makes up the 100 points for the midterm. Questions?
No, thank you though. This is all helpful.
Okay, perfect. All right, let me stop that and stop the recording.